Good morning, 6 o'clock a.m. Pacific Standard Time, 5/31/2011. It is the last day of May. We started out May with a big gap down in that first week, and we're ending the last day with a big gap up once again. As I have said clearly, that price volatility in pre-market will be accelerating or expanding. Most people won't know how to trade it. That's okay with me. However, the MMT network will. And once again, the way that the intraday trade management will be using the SMF platform is that when we do make the intraday high on some of these, so they're going to gap the short sellers that have been short in the month of May, when we had the 4-week correction that SMF had called for. And we're going to go into mid-year. June will be tomorrow upon us. So this is the last way that they started it. Volatility works both ways. You will have 100 right now. The futures are up big. You got a lot of stuff going on around the world that is contributing to it. I can tell you that we're going to be heavily economically data weighted with the short trading week. Not only that, at the end, you got the big national unemployment number. You got ADP coming out tomorrow. You've got the ISM coming out. You've got lots of things that are coming out with economic indicators that have already showed the previous month of where that contraction was. We've got an earnings season coming in July. This is what we call a volatility price action gap. The short sellers that did not cover will be buying to cover in some of these stocks. Travel Zoo was upgraded. You got Priceline with the 447 gap. You got that First Solar because it's over there in Germany, but I'm sorry, their little subsidy plans are going to come down. And that one had missed its earnings. It's one that we had shorted. But these are the gap up list. And the gap up list is expanding bull gap last day of the month. On the other hand, on the gap open down, you only have AVGO gapping down $1.09 in the Nasdaq. And it's very, very, very contracted. It's not an expansionary gap down like you've seen in other ones. And the gap open up has a long list of expansion, 1.00 ratio or higher to qualify. That is the Nasdaq gap open up. The trade management today is when they pull back in the SMF platform, bam, and that IR and that bid and ask ratio starts to rise. And if we stay elevated, that means that the shorts would be covering, and it would give you a good entry at support up to the next, whether it's 3 teenies up, depending on the teeny range in the application. And if it's 50 cents a teeny, it goes up 3 teenies to $1.50. It hits the wall of worry. And the minute that it starts to slide, half of the previous up bars, so you would have to have a red bar right next to the green one, and things would have to change in the platform, and that's where the shorts would get on. Now, as I speak about short covering, and you can see here that the TQQ, which is the bull gap, that's it right here. 84.37 to 86.60. That's the bull. Okay? So, as you gap up, the market hasn't even opened yet. These are artificial price gaps that are used in the futures market. Hey, my name is, wow. Once the market does open up, what happens is when people see these bull gaps, they run right in and start buying. Then they will go up and they will hit the high. Then we're going to take a look and see where that bull exuberance is or the bear pessimistic is. Because between those two parties is how we end up making our living, and we make a market between the public. The thing that I will tell you is that the highs, they're coming back down for a trade. And that's the conclusion of 5/31 of 211, last day of the month at 6:05 a.m. Pacific Standard Time. Market opens in 25 minutes. And remember, volatility is your best friend. The bigger the volatility, the more money you make. And people, if you want to learn how to trade volatility, well, come visit us. We'll show you.